Welcome back to the Contrarian Trader. It is Sunday, October 11th, 2009. Let's just quickly take a look at what happened last week. As you know, Alcoa came out and reported earnings which beat the street by a total of 13 cents. They expected a loss of 9 cents, came out with a beat of 4 cents. I just find it disturbing that um, what they do after hours on a beat like this, a supposed beat like this, is that everybody puts on their party hats and pretends that the analysts didn't lowball the numbers to begin with to make them come in with better than expected earnings. What they didn't talk about when Klaus Kleinfeld came on, that's the CEO of Alcoa, came up with Maria Bartiromo after the announcement came out. He was as proud as a new daddy. But when Maria asked him about forward-looking guidance, he wouldn't answer the question. So what this tells me is that Alcoa is going to have a very difficult time of beating that top line revenue number again. They did make earnings, beat earnings by cutting costs once again, and that's getting to be an old act with Wall Street. They want to see sales rise. Now they were able to make sales rise in the third quarter, but you need to remember you had cash for clunkers and you had China restocking. Is that going to carry over into the fourth quarter? Big question mark. And if you take a look at the chart here, you'll see that we closed out Friday where we closed on Wednesday evening right before earnings were announced. So it spiked above 15 after hours on Wednesday night. It opened above 15 on Thursday, closed down next to unchanged on Thursday, and was down on Friday. So could this be a pullback to fill the gap here? Maybe, but I'll be honest with you, it doesn't look promising, and I wouldn't be a bit surprised to see Alcoa go lower. So the market is telling you that Alcoa's numbers weren't all that great. Why bother listening to the conference call or the CEO after hours? It's all BS. The market's going to tell you what it believes of Alcoa's numbers, and if it was truly all that good, we certainly wouldn't be down on Friday where we close on Wednesday. So the street's not buying these positive numbers, neither am I. But CNBC, they're going to play it up as if it was an amazing beat. The economy's turning around, sales are positive, and they're going to play that same old game again. Let's be smarter than them, and let's not buy into that act. It's getting way too old. Another reason why we're not overly bullish here is that yes, the S&P 500 is coming in to retest that 1080 level, and I wouldn't be a bit surprised for it to do so. But we need to take a look at the volume bars. You can see on the last push upward on the S&P 500 back here, you saw the volume bars spiking higher. That was a bullish. You didn't want to be short the market at that time. That was a time to be bullish, not bearish. But as you see here, we're seeing the inverse relationship. You're seeing the market go up, yet the up volume bars are going down. This is a major concern for longs, as it should be. What you're seeing here is short covering ahead of the bank earnings next week, and that's going to be a primary focus of what goes on in the coming trading week, with the exception of Intel's earnings announcement. Now let's take a look at this is the XLF. Take a look at the way these financials are behaving. Yes, they're coming in to retest their resistance at 1544, but again, the volume is just falling off a cliff. You need to be really careful here and not buy into this act that we're getting ready to break out into new highs. If these banks aren't making any money, believe me, they're not making any money. They're depositing all their deposits with the Federal Reserve, and they're making more money off of interest being paid to them from the Federal Reserve. They're not lending it out. They're not making new loans. They're screwing people on the credit card fees. Now Congress is starting to try to squeeze them back down again, try to squeeze their earnings more. So these banks have a major question mark hanging over their heads. You have Alt-A mortgages, which is going to be the next wave of foreclosures coming down the pike. You have the moratorium in California on foreclosures. That's gone. You have a question mark over whether or not they're going to extend that first-time home buyer rebate. My bet, they're going to do it. and that may help spike the banks, and you'll probably get that announcement this week. I bet you if you see bank earnings coming weak, J.P. Morgan's going to kick it off. I bet you'll see them come out and try to, rather than let these banks just drop down, they'll extend that first home buyer rebate. I'm not all that bullish on these banks, as you know. I'm long the FAZ. I'm still long the FAZ. I could have taken profits on that a couple of weeks ago. I chose not to. I'd rather add as we go into the into earnings here. So let's keep an eye on the banks. Okay, I believe it's on Wednesday. J.P. Morgan's going to come out before the bell, and just just be careful. Okay, if they come in with disappointing earnings, you're going to see this whole market roll over. Now let's take a look at the transports. Now remember, I mentioned this last week. The transports need to participate in a rally for the rally to have to be confirmed. You're not seeing that. You're not seeing the transports really try to attack that 4,000 level as they did back in September. They're laggards. Look at the volume on the transports. It's very low. They'll be lucky to hold on to this 50-day moving average. Is my prediction as we come into the trading week. If they fall, you're going to watch the Dow fall as well. Why? Why are we seeing this weakness here? My bet is that we're going to see strength. Although the Fed doesn't want to raise interest rates, my belief is going to be that you're going to see the market start to price in interest rate hikes. Now, you'll take a look at the 10-year bond yield last week. It managed to break above resistance at this, say, 3.3 level, I'd say. And my prediction is that you're going to see bond yields head higher. And as you know, we started shorting the PZA, which is a municipal bond fund, some time ago, a few weeks ago. And the municipal bond funds, they're starting to feel the pressure from rising interest rates because that means they have to pay out more. So, and the prices become weaker. So as these bond yields rise, you're going to see weakness in these municipal bond funds. So we're going to continue to stay short this position. U.S. dollar. On Thursday evening, I sent out a commentary to my subscribers that the market is predicting that the dollar is going to break to new lows, and there's a good chance that it will, folks. But being contrarian, it makes me concerned that you have the prevailing wisdom is that the U.S. dollar is going to correct to new lows. What we have here is a perfect setup. You have a W formation forming up. You have this is the first bottom, second bottom, double bottom. Okay, here's the foundation for your W formation. Here, 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 and if you see that breakout, that'll complete the W formation. So my prediction is that we could see some continued consolidation along this support level, and then perhaps a breakout, and then you're going to really see the Dow stocks, the big S&P 500 stocks, correct, because that means their exports, which makes up 45% of their sales. It's going to feel pressure on dollar strength. So you're going to see a lot of weakness coming to this market. Remember, this is a market that's based on cheap money, liquidity from the stimulus, and a weak dollar to help with exports. If you see the Federal Reserve or anticipated fact that the Federal Reserve is going to start soaking up liquidity and strengthening dollar, that's going to hurt the U.S. stock market. So be wary, okay? Please be wary. Stocks on our watch list. We're adding Nortel Investoria. It's an Argentinian company. I can't even say it. NTL being the symbol. This is to our short watch list. You'll note that it's getting into extreme overbought levels. Don't short this stock yet. Still got some room to the upside. Fold, we're adding as a long to our long watch list. Extreme oversold levels. We like this stock. Don't wait for an alert. Subscribers, wait for an alert to come out to you before you execute this trade. RVSN. I could still see some continued downside to this stock. It's not a short. Do not short this stock. This is going to be a long watch list, but I think we're going to see another leg down on this. UUP. This is a dollar ETF. It's a dollar long fund. This is going to be probably an addition we're going to make to the portfolio. I could see the dollar rallying. We have a great exit point here. If it breaks down below 22.49, we get out of that position. and it's not a short at that time, not for me anyway. But it's a good risk to reward trade. We know exactly where we want to get out on this trade. We have very small loss if we choose to make this trade this week. You've seen it on the RSI, how it's coming. It's not coming completely down to below that 30 level. It's finding support at the say 40 level, and now it's starting to curve upwards. That's a sign of strength, relative strength. It's performing well, so I could see some continued uptrend. Folks, join the contrarian traders. Stick with us on these new trades. Be careful in this coming week, and good luck to you. Okay, bye bye.